Hi there, welcome to ET Now. You're watching Market Cafe with me, Kanishka Sarkar, a show where we'll take you through all the domestic and global cues ahead of today's trading session and also tell you about the stocks that you need to keep on your radar today. But before that, let's get started with an eye on the globe and take a look at how US markets fared last week and what are the cues that we're tracking this morning. Well, Wall Street did end the last week on a high note with the Dow Jones Industrial Average surging more than 800 points or nearly 2% to a fresh record, while the S&P 500 that gained 1.5% and came within the touching distance of its all-time record high. The Nasdaq also jumped nearly 2%, lifted by tech strength. Meanwhile, the rally was followed by the rally that we saw last week followed Fed Chair Jerome Powell's Jackson Hole speech, where he signaled that the Fed could start cutting rates as soon as September. Now, odds of a quarter-point cut are now at 84%, sharply higher than earlier last week. Now, looking ahead, all eyes are on Nvidia's earnings and Friday's PCE inflation report, which is also Fed's preferred gauge that is expected to show core prices rising about 3% year-on-year basis. Now, both will be key in shaping the Fed's next move. And of course, the key to note is that Powell in his speeches indicated that the focus now shifts to job data instead of inflation. But before we discuss that in detail, let's also take a look at how the commodity market is shaping up this morning. First up, let's talk about oil prices. They were steady on Friday, but still logged their first weekly gain in 3 weeks. In fact, the Brent settled at that $67.73 per barrel level, whereas the WTI that closed at $63 per barrel. Now, both these benchmarks rose over 1% in the previous session, that is Friday, with the Brent up 2.9% on week and WTI higher by about 1.5%. Now, remember, these gains came amid hopes of a possible peace deal between Russia and Ukraine after US President Donald Trump said that he will watch if Presidents Putin and Zelensky can work together to end the war. On the other hand, we have gold, which did rise on Friday but has fallen this morning, though, like I said, it did rebound on Friday. It was buoyed by heightened expectations of a September rate cut following comments from Jerome Powell at the central bank's Jackson Hole Symposium. Now, this morning, gold was down about 0.2% at $3,410 per barrel per ounce level. Well, let's shift focus now to the top global story that we are tracking. Last week, Federal Reserve Chair Jerome Powell, in his address, spoke on labor markets in transition. Now, he has signaled a cautious approach to monetary policy, balancing persistent inflation above the 2% target with a softening labor market as unemployment has hit that 4.2% level. Now, with markets eyeing a September rate cut, Powell remained non-committal, emphasizing data challenges and central bank independence amid political pressures. But he's also dropped in some positive hints. Now, let's listen into what he said on the labor market and the effect of tariffs on prices. Let's take a look.
The effects of tariffs on consumer prices are now clearly visible. We expect those effects to accumulate over coming months with high uncertainty about both timing and amounts. The question that matters for monetary policy is whether these price increases are likely to materially raise the risk of an ongoing inflation problem. A reasonable base case is that the effects will be relatively short-lived, a one-time shift in the price level. Of course, one time does not mean all at once. It will continue to take time for tariff increases to work their way through supply chains and distribution networks. Moreover, tariff rates continue to evolve, potentially prolonging the adjustment process. The labor market had cooled from its formerly overheated state. Upside risks to inflation had diminished, but the unemployment rate had increased by almost a full percentage point, a development that historically has not occurred outside of recessions. Over the subsequent 3 Federal Open Market Committee meetings, we recalibrated our policy stance, setting the stage for the labor market to remain in balance near maximum employment over the past year. This year, the economy has faced new challenges. Significantly higher tariffs across our trading partners are remaking the global trading system. Tighter immigration policy has led to an abrupt slowdown in labor force growth. Over the longer run, changes in tax, spending, and regulatory policies may also have important implications for economic growth and productivity.
And we also have Varun now who's standing by to give us all the roundup of Powell's comments. Let's go across and listen in to what Powell had to say.
Okay, so it was Jerome Powell's, Federal Reserve Chairman's speech, which everyone was eyeing at the Jackson Hole Symposium, and the most important thing at the speech was his tone, which is now more dovish rather than hawkish, which he used to be earlier, and the focus is now being shifted to data rather than inflation. And Powell has said actually that the labor supply has actually softened in line with demand, and the situation suggests that there is a downside risk to the employment, which is actually rising. No doubt he has kept his overall inflation target. He has reaffirmed his inflation target of around 2%, but he has also said that the effects of tariffs on consumer prices are now clearly visible, and also he expects the effects to accumulate in the coming months. Although the reasonable base case is that the inflation effect on tariffs are actually short-lived. But yes, the focus has now been shifted to actually, job market or labor conditions rather than inflation. And, this was his last speech at the Jackson Hole Symposium as the Fed chairman. So, but the market is liking it, because if you see, after his speech, the probability of rate cuts have actually increased, and now many are expecting that you would see a 25 basis point rate cut from the Fed in the month of September, and going ahead also you might see more rate cuts by the Fed. Also, this has been liked by the equity markets and also asset classes world over, because if you see, after the Federal Bank's comment, we have seen rally in the US markets. The Dow Jones was at life high. Also, we have seen rally in other asset classes like Bitcoin, like gold. But yes, we have seen decline in the overall bond prices in the bond yields of US markets, may it be the 10-year yield, may it be the 2-year yield, or may it be the 30-year yield. This decline is basically because people are now expecting that you might see a rate cut in the month of September. So it was the last speech of Jerome Powell as a Fed chairperson at Jackson Hole Symposium, and the equity markets, or majority of the markets, are actually liking it.
All right, thank you, Varun, for taking us through all those details and the key comments that Fed Chair Jerome Powell made during his Jackson Hole Symposium speech. But let's also take a look at how the Indian markets fared on Friday, and how and what to expect when it comes to this week. Now, Snehi, my colleague, is standing by with all those details.
Well, yes, the markets may have ended in the green over the course of the week, but Friday's trading session was absolute mayhem on the street, because you had an 0.8% cut coming in on the Nifty, quite a steep cut coming in, and about 200 points lower is where the Nifty has managed to close. Other than that, if you take a look at Sensex, also similar cuts coming in. 0.8% cut is what we've seen on the Sensex as well. And you also have India Wix that spiked up a good 3% in trade, so that was also an index to watch out for, because we've seen some volatility, some movement there after quite some time. Let's take a look at the Nifty Bank. A 1% drop is what we've seen in that index. Quite a major cut coming in of 600 points on the Nifty Bank. So that was also an index to watch out for. Select handful of stocks that ended in the green from the Nifty pack, like M&M, Maruti, Bharti Airtel, BEL. On the flip side, a lot of pressure being built on Asian Paints, Grasim, Ultratech, Adani Enterprises and Hero Motors. So these were some of the top gainers and losers from the Nifty 50 pack. For the longest part of the day, you had the mid-cap and the small-cap index that were holding on to nominal gains, but all of that fizzled out towards day's close as well, because both of those broader indices have also shut shop in the red on Friday. Other than that, let's take a look at some select sectoral gainers and losers. You had Nifty Pharma that was doing very well, and some select media stocks also doing very well. So names like Ipca Labs, DV's, Torrent, Aurobindo, Gland, Lupin, Biocon from the pharma pack were doing very well. On the flip side, major pressure, more than a % cut seen on Nifty Metal. So you had names like Jindal Steel, JSW Steel, Nalco, NMDC, Hindustan Zinc. All of these stocks were under pressure, as was the case with Nifty PSU banks. A bunch of these PSU banks were also trading under pressure and under deep pressure as well. Other than that, if you take a look at some select winners and losers, ABFRL was a winner that did very well. So did Dixon Tech on the back of positive brokerage news. On the flip side, you had negative brokerage note coming in for ITC. So that stock was under pressure, but a fresh 52-week high being seen for Paytm as well. And some of the stocks that reached their life have Uno Minda, JM Financial, L&T Finance, HDFC, AMC, Lemon Tree. So watch out for all of these stocks. And it's going to be very crucial to see where we open in the next trading session, as the next week is going to be truncated. But that's the roundup of how our market has been on Friday.
All right, Snehi, thank you so much for taking the time out and joining us with all the details and the roundup of how the markets fared last week. But let me get on board Seth R. Freeman, the Senior Managing Director of Glass Ranta Advisory and Capital Group LLC, who's now joining us. Hi, thank you so much, Mr. Freeman, for taking the time out and joining us. Mr. Freeman, big news coming in as far as Wall Street is concerned. We could perhaps expect a September rate cut. But, you know, the way things are moving, the way markets reacted, do you think that was a bit of an overreaction? We did have, you know, analysts come on board and speak to us about, you know, the entire thing that transpired at Jackson Hole. And, you know, some of the analysts were quite divided about the fact that it was a bit of an overreaction because the market is not really pricing in perhaps the inflation that might ensue as a result of tariffs, because historically tariffs have caused, you know, the prices to pass down to the consumers. So that's something that the market is not pricing in. And the shift for Fed has also shifted to the labor market instead of inflation now.
Yeah, it's very interesting. But as I mentioned, I think in the last time we were together, the Fed would be looking at the labor market as much as inflation. And we're still experiencing kind of this time gap between the imposition of tariffs and their effect on real pricing. I did want to point out, though, my wife wanted me to point out that these beautiful marigolds, which I know are important in India, were grown in her garden.
All right, hi, Mr. Freeman. This is Kanishka also joining in. You know, just like Ankita was talking about the markets and how they probably overreacted when it came to, you know, Powell's comments. But do you expect this kind of rally that we saw last week to sustain going forward in the coming week or, you know, in the month of September at least before we see that Fed rate cut happening?
You know, generally I'm kind of, you know, negative muted, but I actually do expect a little rally or at least, you know, some modest continued increases as we get past the Labor Day weekend.
Right. So, Mr. Freeman, does the rate cut that go on in September, what would be the dot plot for Fed, and what would be the path for rate cut going ahead? Because that's also something that everybody is watching out for. Now, September rate cut perhaps on the annual at 25 bips is what we are pricing in. But going ahead, there might be a pause on the rate cuts because then they would be assessing the inflation. And we did manage to figure that out from the commentary that post-September, there could perhaps be a pause.
Yeah, I would actually expect a pause because the level of imported goods that were front run in anticipation of the tariffs are beginning to wear down. And that's when prices are really going to become, you know, apparent to end users. And that's going to put pressure on our economy.
Okay. And Mr. Freeman, like you said, you are quite positive on the markets as of now, and we could see a rally coming in. You know, the last leg of rally that we saw in the US markets, that was driven by tech majorly. Now Dow is also, you know, at all-time highs, but largely it was driven by the tech stocks in S&P 500 and NASDAQ. So do you expect this sectoral trend to continue, or is there any other sector that we, you know, can expect to lead the next leg of rally for US markets?
Yeah, it's a very good point that actually a small number of stocks are driving the gains. But I do think we're going to see a broader range. There really are, I think, real announcements of U.S. core companies, manufacturing companies, at least announcing plans to increase their investments here domestically. And the market is, you know, future oriented. So that may help a little bit. I think it also has to do with, you know, global sourcing issues in terms of, you know, is policy going to change in regard to tariffs on electronic goods imported to the United States, meaning Apple and these kinds of targeted companies.
Mr. Freeman, once the interest rate comes through, what does it mean for the emerging markets, especially India? Because once the interest rate comes through, the bond yields cool off, the dollar index comes down. It's a big positive for all the emerging markets. They begin to look more attractive. Where does India stand in the larger picture then, given the kind of trade war that we are stuck with the US? Where does India stand in the larger scheme of things?
Yeah, well, India will be a beneficiary, and there are investors that make focused investments in different emerging markets companies, but also there's a tremendous amount of money invested in emerging markets index funds, and so India will gain by its proportional allocation in those index funds. But I think this is generally, frankly, positive for emerging markets broadly and India ultimately in particular.
All right, thank you, Mr. Freeman, for taking us through all those Q and helping us
Thank you.
understand, the macro setup and also what what to look at when it comes to India. But moving on, let's shift focus back to which are the stocks that we need to keep on our radar today. And for that, we're now joined by Ashesha. Ashesha, good morning. Which are the stocks that you're tracking this morning?
Well, yes, Kanishka. First up, let's talk about Coal India, where the company has gone ahead and signed a pact with Madhya Pradesh for critical minerals. So some important development coming in over here, and Coal India will be in focus on the back of that. Let's also put the spotlight in the cement sector. A Star Cement will be in focus. Positive news flow coming in over here, where the company has been declared preferred bidder for mining lease of Parevar limestone block. This is in Jaisalmer, Rajasthan. This is via e-auction conducted by the government of Rajasthan. So positive news coming in for the cement player, Star Cement in focus on the back of that. Shifting focus to the real estate sector, then Brigade Enterprises, where the company has launched a new project. They've launched a residential project in Bengaluru, and the total revenue potential of this project stands at over 950 crores. Positive development for Brigade as well. Shifting focus to JSW Energy, then they've received 1473 crore demand notice from government of Odisha for a matter related to an iron ore block. So negative news coming in over here. Put the spotlight on JSW Steel as well. Lastly, Nuvoco Vistas, where NCLAT has set aside the plea against Nuvoco Vistas bid for Vardharaj Cement. Negative news flow. Let's see how the stock reacts, but this one will be in focus on the back of this.
All right, so those are the stocks that you need to watch out for. But let me go to my colleague Sharad, also standing by with a couple of names that you need to keep on our radar. Sharad, take us through the stocks that you have picked out for us.
A lot of media adjustments are expected to happen till the month of September, be it NSE or MSCI and even FTSE changes. First, NSE index rejig changes effective from September 30th. That means the close of 29 September session. In comes Interglobe Aviation and Max Healthcare, and the exclusions include Hero Moto and IndusInd Bank. Up next, FTSE changes. The changes are effective from September 22 onwards, and the key inclusions in their all cap index, all world index, they include Godfrey Phillips, Indian Overseas Bank, JK Cement, to name a few. Interestingly, Mazagon Dock is also in focus as Center has cleared 75,000 crore worth rupees of submarine deal with Germany. Recently, large deals were announced for Tejas aircraft space as well. Yes Bank, positive news flow as SMBC has received approval from RBI to purchase 24.99% stake in the bank. Now, SMBC would not be treated as the promoter of the bank. That's an important RBI takeaway. Adani Ports, Adani Logistics Park has broken its ground in Kalamassery, Kochi, and that's a positive news for the stock.
All right, so lots of stocks to keep an eye out for today. So those are the stocks we'll be tracking. But let's also take a look at some of the cues that we need to track today ahead of today's trading session and also later in the day. First up, in terms of global cues, we have the UK market, which is closed for trading today. Now back home, it's the last day to buy shares to be eligible for a 1:1 bonus issue when it comes to HDFC Bank, Karur Vysya Bank as well. Apart from that, in terms of corporate action and AGMs that are going to be happening today, we have Vodafone Idea, Astral, Nykaa, BPCL, Hindustan Zinc, Aarti Industries, Greenply Industries will also hold its AGM today. Apart from that, we have Info Edge and Alchem Labs that will be holding their AGMs later today. But apart from that, the lock-in period also ends for Sirma's SGS today. So that's something that you need to keep an eye out for. So lots of stocks that we are tracking, especially when it comes to AGMs that they are holding.
All right, so those are the cues to watch out for. But with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we'll get you more updates on the market. Stay tuned. Good Good morning. You tune in to Market Cafe with me, Ankita, Saxena, and with me is Kanishka, Sarkar. And we are taking you through all that you need to keep on your radar before the start of D Street today. Let's take stock of how Asian markets have opened up. In fact, for the Nifty, the implied start shows an uptick of 55 points or 0.2%. But even Asian markets are in the green. They're following suit from Wall Street. In fact, they're looking ahead for the September rate cut on Wall Street. And on the back of that, we do see Nikkei that's jumped up. It's up almost 0.6% jump coming in on Nikkei. We also have other markets like Hang Seng that is up 1.2%. Shanghai is also trading up more than 0.5%, 0.6% gain coming in on Shanghai as well. S&P ASX 200 also trading up with gains of 0.3%. So it's a sea of green that's coming in Asian markets as well. They are following the cues from US markets and also expecting a September rate cut coming through. We also have a couple of cues to track for. We are tracking Singapore CPI number that is due for the month of July, and Reuters is expecting a 0.6% year-on-year rise. It's consistent with the month before. So that's something that we're tracking out from Singapore. But largely in the green, Asian markets, and India also, for the Nifty also, we're expecting a positive start with an uptick of 54 odd points.
All right, so start in the green is what we are expecting for the Indian markets as well. But let's shift focus to some more news updates. Now, in the latest on GST reforms, the GST Council meeting will be held on the 3rd and 4th of September. The government is aiming to implement GST reforms before the festive season kicks off. In fact, my colleague Prakash Priyadarshi is now joining us with all the details on this front.
The GST Council is scheduled to meet on September 3 and 4, which is going to be an extraordinary GST Council meeting where you can see mega reforms under GST. In fact, there will be an officers meeting on August 2nd to give final shape to the proposal, and that will be put up before the GST Council for its consideration. You were aware that the GOM on rate rationalization has already approved the centre's proposal to have two rate structure, essentially 5% and 18%. The 12% and 28% slabs will be scrapped as per the proposal, and there will be separate slab of 40% where thin goods and high-end luxury items will be placed. Along with that, GOM has also accepted Centre's proposal to exempt GST on life insurance and health insurance premiums for individual. A very significant development coming in. We can see a complete overall of a GST after 8 years of implementation. In fact, the Prime Minister has already given a glimpse of the next set of GST reforms from the Red Fort. And after that, the process has been initiated. A comprehensive proposal has been prepared by the central government, which was accepted by GOM. And now it's time for the GST Council to take the final call. Sources are also indicating that the central government is committed to implement potential rate reduction under GST before festival season.
All right, let's move on to an exclusive then. In an exclusive interaction with the Amphi, my colleague Ankur Mishra caught up with the chairman Navneet Manod and Chief Executive Venkat N. Chalsani on efforts to grow more investors, first-time women investors, and financial literacy and business awareness. Let's listen into this piece of the chat.
I think we have reached 5.5 crore unique investors. That number is likely to increase substantially. The awareness has increased that mutual fund sahi hai. Awareness has increased that people need to invest for the long term. They need to secure their financial future, need financial independence. Mutual fund has all the solutions. But I think what we need to do is convert that awareness into action. And all the steps that we have seen today, which we announced under the guidance of SEBI chairman, this is what industry is going to work very hard over the next several years.
Few of the announcements which were there by SEBI chairman, one of them, of course, getting more women investors and incentives for them. How that is going to work out?
I think we are working with SEBI on the finer modalities. What he mentioned was that how can we incentivize people to get more women investors? How do we incentivize people to get more investors from the hinterland, from what we in our industry parlance call B30? How do we get more investor participation in the mutual funds in a highly disciplined manner? So we are very thankful to SEBI for encouraging us to increase the participation of more and more Indian households into mutual funds.
See, one of the most important things that we want to do is the literacy across the length and breadth of the country. Once people are financially literate, automatically they will look at what are the good options for them to invest. They become part of the growth story of the country, and in the process they find this as one of the instruments, and automatically the business will grow up. So we are ensuring as a trade body of the mutual funds to spread the financial literacy across the length and breadth, and that's what you have seen today. Right. In the 4 adopted states, we said that 4 marquee institutions, which are IIMs, 3 IIMs and 1 XIM, these 4 institutions we tied up. Through them, we want to impart the education, financial literacy to all the students doing final year in the colleges and universities and others, and then take them to the next step of employment as well. So that's the first objective. Then we'll see how automatically the business will grow.
Right. So awareness is one thing, and I'm talking about numbers. SEBI chairman also mentioned about the milestone. I want to understand, do we actually look at few of the milestones going ahead? Is there some forecasting which you are going to do today? And more than that, he mentioned about micro SIPs that should gain momentum. How will that happen?
So as I said, awareness is something which is important, and that's through that we are going to the length and breadth of the country. For going to the length and breadth of the country, the micro SIP is going to be the most important tool. 250 rupees today. Earlier, if 500 rupees was the minimum amount, we brought it down to 250. Most of the AMCs have already started, but there are some AMCs which are yet to do it. All together, we're going to do it, and then we'll start a campaign, because sachetization, making the people invest into it for a long term with a financial awareness is extremely important.
All right, so those were some exclusive interactions with AMFI top officials. But on that note, we'll take a very short break. Be right back with more news and updates coming up on the other side.
Welcome back. You're tuned into Market Cafe, where we are getting you all the top headlines and the cues that you need to keep on your radar before the market starts. Let's take you through the top headlines then. Prime Minister Narendra Modi will be on a 2-day visit to Gujarat, during which he will inaugurate and lay the foundation stone for development projects worth over 5,400 crores in Ahmedabad. The project spans urban development, energy, roads and railways, reinforcing the government's focus on infrastructure and connectivity. And in a recent development, the Department of Posts has announced a temporary suspension of postal services to US starting today. This comes after a US executive order that introduces new custom duties on international shipments.
Next up, the Uttar Pradesh police have arrested accused husband in the Noida dowry horror case, and he has been sent to jail. Police have also arrested the mother-in-law of the dowry victim in connection with the case. Meanwhile, the National Women's Commission has taken cognizance of the case and has sought a report from the UP DGP within 3 days. Next up, as the nation gears up to welcome Lord Ganesha on the occasion of Ganesh Chaturthi starting from Wednesday, the first look of Amchi Mumbai's most iconic Ganesha idol, Lal Baksha Raja, was unveiled last evening. The unveiling drew large crowds and marked the beginning of festivities for one of Maharashtra's most widely celebrated religious events. Ganeshotsav spans 10 days of joyous celebrations, elaborate rituals and other festivities, and concludes with the Grand Visarjan, which will fall on September 6th this year.
Of the grand opening and unveiling of Lal Baksha Raja, one of the most iconic Ganpati pandals in Mumbai. But let's move on then. OpenAI is all set to open its first Indian office in the national capital. While the exact location is yet to be finalized, the hiring is currently on. My colleague Sumita Karir is joining in with the details.
OpenAI has officially set up a local unit in India. It plans to open a first office of the company in New Delhi later this year, and that really underscores the fourfold growth that ChatGPT has seen in India in the past year or so, and that's according to a company statement. While OpenAI is yet to identify a location for its offices in New Delhi, it has, like I stated, it has set up an official India unit, and it started hiring a local team as well, and the team will be focusing on strengthening relationships with local partners, governments, businesses, developers and academic institutions. In fact, OpenAI's plans to enter India follows its ChatGPT subscription plans that are tailored specifically specifically for Indians with an India-specific subscription plan at 399 rupees per month when integrated with UPI. In fact, reacting to the development, OpenAI CEO Sam Altman stated that the level of excitement and opportunity for AI in India is incredible, and India has all the ingredients to become a global AI leader. And in fact, reacting to that was also Union IT Minister Ashwini Vaishnav as well. And of course, he's also spoken about how India wants to become a leader in the space of AI globally. In fact, according to OpenAI, if you look at some stats as far as its India traction is concerned, well, India is ChatGPT's second largest market by users and one of its fastest growing. In fact, ChatGPT's weekly active users in India have quadrupled over the past 1 year, and India ranks amongst the top 5 developer markets globally on the OpenAI platform.
All right, thank you, Sumita, for taking us through all those details. But moving on to the latest on India-US trade deal. Now, India's External Affairs Minister S. Jaishankar said that the trade negotiations with Washington still continue before US levies hefty additional tariffs on India. Now, Jaishankar also rejected Washington's criticism that it is running a profiteering scheme by buying discounted Russian crude oil. Jaishankar asserted that New Delhi's procurement has been national and global interest. Now, let's go across and listen into what he had to say on the matter.
It's funny you have people who work for a pro-business American administration accusing other people of doing business. Okay, that's really curious. But here's the point. If you have a problem buying oil from India, oil or refined products, don't buy it. Nobody forced you to buy it. I mean, but Europe buys, America buys. So you don't like it, don't buy it.
Right, keeping with the trade deal then, US Vice President J.D. Vance defends Trump's secondary tariffs on India as aggressive economic leverage, which is aimed at pressuring Russia to end the war in Ukraine. Vance added that such a measure was a part of Washington's plan to make it difficult for Russia to collect high revenues from its oil trade.
All right, next up, US President Donald Trump has nominated Sergio Gore, a close aide and a White House Director of Presidential Personnel, as the ambassador to India. Gore will concurrently hold charge as Special Envoy for South and Central Asian Affairs, if confirmed by the Senate. Sumita is back with us with all the details on this front.
That's right. Sergio Gore is the new U.S. ambassador in India. That announcement was made by Donald Trump on his platform Truth Social, where he stated that for the most populous region in the world, it's important that I have someone I can fully trust to deliver on my agenda. That was Donald Trump's tweet. So that really sort of goes on to show how important this appointment of Sergio Gore is, not just for India, but for this whole region, as is evident from Donald Trump's tweet. And of course, it seems that Gore is likely to be the envoy for South and Central Asian affairs. Remember, Gore has been a director of personal office. In fact, he's a close aide of Donald Trump. And he has played a key role in Donald Trump's political movement. So definitely, this responsibility has been given to someone who has been close to the president to sort of take his agenda, to take his key messages, across this region. Now, what makes this development even more significant is this tweet that's been posted by Marco Rubio. Now, Marco Rubio says that Sergio Gore is going to be an excellent representative of America in one of the most important relationships our nation has in the world. So that really shows you that the United States stance towards India is now softening. It's now changing from the constant attacks that the US administration has made on India with respect to its energy trade with Russia. This one definitely shows that, of course, the stance is perhaps changing. But what makes this development furthermore significant is the fact that it is coming in at a time when tensions between the United States and India have soared over tariffs, over these elevated tariffs particularly. And of course, perhaps this development indicates the United States' concern over India reaching out to multiple geographies for diversification of its trade. Meanwhile, other partners are also reaching out to India. There's been a thaw in China-India ties as well. Russia has stated that you can sell your goods in Russian geography. That's essentially what China has also indicated. So, of course, this development becomes significant in light of this particular context, and we'll have to wait and see how this really pans out and how soon Sergio Gore really assumes office.
All right, we will be waiting and watching out for that big meet and the outcome of that. But in other news, reports suggest music streaming platform Spotify is planning to raise prices. This comes as it invests in new features and targets 1 billion users. Now remember, the Swedish firm had previously hinted that it would increase the monthly price for its premium individual subscription in some markets from September as it looks to improve profit margins. Price increase comes combined with cost-cutting efforts in recent years, helped Spotify achieve its annual profit last year. And Bank of Japan's Governor Kuzo Ueda has hinted for another interest rate hike. This comes amid wage hikes, which Ueda said is spreading beyond large firms and likely to keep accelerating due to the job tightening market. Now remember that rate hike was put on pause due to concerns over fallout from US tariffs on the export-resilient economy later this year.
All right, next up, Elon Musk's SpaceX called off the launch of Starship's 10th mission from Texas amid an issue at its launch site, which delayed an attempt to achieve several long-sought development milestones missed due to past tests, ending in early failures. Now remember, this marks another setback for the giant rocket, which has faced repeated failures in recent months. Well, so those are the top headlines, global headlines that we are tracking this morning. But on that note, we'll take a very short break. Be right back with more updates coming up on the other side.
Welcome back. You're tuned into Market Cafe, where we are taking you through all the cues you need to watch out for before these streets start today. And let's go across and see what the cement industry is up to. Yes Securities has conducted channel checks on all India average prices. How is the demand really shaping up? Let's go across to my colleague Ashesha, who's standing by with all the highlights of the channel checks. Over to you, Ashesha.
Well, yes, channel checks suggest that cement prices on an average have declined by nearly 4 rupees per bag in the month of August so far. Now, if you look at the region-wise performance, Eastern region saw the steepest cut of nearly 6 rupees per bag, followed by Western and Southern region, where prices declined by about 5 to 4 rupees per bag. This is on a month-on-month basis in the month of August so far. Central region prices have declined by 2 rupees per bag, and prices have remained largely flat in the Northern region in the month of August so far. Now, if we look at the reasons which led to the fall, one of course is the continuous monsoon and heavy showers that we have seen across several states. Sand mining issues, crop sowing activities, labor shortages and liquidity crunch across several states. So these are some of the reasons which led to the fall in cement prices in the month of August. As far as demand trends are concerned, that continues to remain sluggish. Now remember, demand remains subdued in the month of August. It has declined by about 20 to 25% on a year-on-year basis in the month of August, and also a decline of nearly 30 to 35% on a month-on-month basis as well. Remember, mid-monsoon conditions followed by festive season is likely to weigh heavy on demand going forward as well, and dealers are expecting demand to revive only after Diwali this year. So yes, demand trends have been sluggish, but remember, there is buzz of price hike to the tune of 20 to 25 rupees per bag with effect from August end. However, dealers are saying that this perhaps will not be sustainable going forward because of the kind of demand trends that we are seeing. So for now, prices have declined, demand has been sluggish, and dealers are penciling hopes of demand revival only after Diwali this year.
All right, thank you, Ashesha, for taking us through all those details about cement price check and demand as well. But moving on, we have Jefferies come out with a note on their India strategy. They've given their takes on the upcoming GST rationalization, India-China relations, and also US tariff scenario. My colleague Srishti is now joining us with all the details. Srishti, over to you.
Well, yes, Jefferies has come out with its note on India strategy, where they have highlighted a whole host of factors that could be at play for the Indian markets. And first up is GST rate rationalization, where they say that the slab rationalization exercise, where the council will be meeting on 3rd and 4th September, that is seen as a major reform, and that was actually due after 8 years of GST rollout. And it's been over a year in the making and should aid consumption without much of a fiscal hit is what they are highlighting. Now the tax cuts are likely to be funded by the conversion of the GST cess not required from FY27 into GST, as currently cessed items are likely to be addition on some luxury as well as other items as well. In terms of the sectors, Jefferies do believe that it could be positive for the two-wheelers, four-wheelers, cement and aircon are some of the key sector beneficiaries for this particular move. And on to the geopolitical situation, Jefferies is highlighting that the US tariff situation, the government is preparing for the worst case scenario. The China relations are normalizing, but that is seen as a part of an ongoing process because this could help India in the matters such as ramping up electronic productions, improving fertilizers and the rare earth supply as well. And lastly, the privatization and disinvestment. That should also get another leg up with the government looking to wrap up the IDBI privatization by March 2026 is what Jefferies is highlighting. So a whole host of factors that are at play for the Indian markets and the key beneficiaries that are likely is what they have highlighted.
All right, so that's the index strategy by Jefferies. But let's move on. We have two major index rechegs that we are also looking at, Nifty and FTSE. Both are going to perform rebalancing in the indices next month, while Nifty rejig will be effective from 30th of September. FTSE will be effective from the 22nd of September. What will be included and what will be excluded? Let's go across to my colleague Sharad, who's standing by with the details.
Till September end, a lot of rejigs are happening, the mid-year rejigs, especially for NSE, MSCI and FTSE. Now, to start with Nifty 50 index, NSE index rejig, these changes are effective from 30th September. That means from the closing session of September 29th. In comes Interglobe Aviation and Max Healthcare, and the exclusions from the Nifty index, they include Hero Moto and IndusInd Bank. Also, FCA changes, the changes are effective from September 22, and the key inclusions in the all-world indices, these names include Autumn Infra, Godfrey Phillips, Cholamandalam Finance, Hexaware Tech, Indian Overseas Bank, JK Cement, MCX and Narayan Hrudayalaya. Now going into the details, the large cap names also include Coromandel and Bharat Dynamic, while in the mid cap space, Balkrishna Industries, IREDA, LTTCS, MCX, Premier Energies, Thermax, United Breweries and Walters make it to the list. Also in the small cap indices for FTSE, the important names include Aarti Pharma Labs, Azad Engineering, Force Motors, Gabriel Linda from the auto ancillary space. Also making it to the list are India Shelter Finance, Power Mech Projects and Sundaram Finance Holdings.
All right, thanks Sharad for taking us through all those details. Now let's see how the market reacts to that Nifty rejig. But with that, we're completely timed out on this edition of Market Cafe. Ankita and I will see you tomorrow, but don't go anywhere as the market will take all the action forward.